Is Elon Musk abandoning Tesla as he gets tangled up in the Twitter trouble? And if so, where exactly is the company headed? Sit tight as we go through recent news as well as my chart analysis and price prediction based on this week's performance. But before we do that, subscribe to our channel Stox 101 for regular stock market updates. Ever since Elon took over Twitter, he has been facing issues from backlash against his new blue tick plan to employees that have been laid off in various countries coming together to sue the company. People are speculating that as Elon gets busy with finding a solution for his Twitter problems, he has started ignoring Tesla, and as a result, the stock price fell from $235 to $207 this past week. Elon recently addressed this problem while responding to a tweet where a user said that Tesla staying strong while Elon focuses on Twitter is a sign of Tesla's strong fundamentals. And replying to this, Elon said that he still works at Tesla and he visited the Palo Alto office on Thursday night. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the 1-day chart for Tesla, and as always, we'll first analyze the 1-day chart, then the 1-hour chart, and turn it off, we'll get into the 5-minute chart. But right off the bat, we can see that we got an inflation trend over here in the stock's price, after which, of course, we got deflated and we fell after touching a high of $237, of course. And now, if we talk about this particular week, we're down pretty much from the level of 237 to around 207. So this is pretty much a, well, what was it? I'm sorry, I forgot to look. We are down pretty much 11 or 12%, which is of course quite bad. But as we already discussed in the previous part of this video, that this mainly is because of two reasons. Of course, first is the part that, Tesla and Elon Musk, that stuff. Elon Musk is not exactly focusing on Tesla, as, people are saying that on Twitter. So, of course, that is the first part. And second is the recession and how, the inflation and all of that stuff is getting even worse. And after Jeremy Powell said that, the Fed will continue to increase interest rates until inflation is curbed. And they also said that, the inflation problem and the recession problem will not be, solved anytime soon. So that, of course, is a bad sign for the stock. We did get some bad earnings report, of course. We did get a bad revenue. So, of course, that did cause this, somewhat of a massive gap down. After that, of course, now we're back to a normal valuation. And now I believe that we'll continue where we left off, right? So, of course, we broke this trend thanks to the earnings report, after which, of course, we got inflated. And now, we might just continue this trend because we're back to these levels. So now let me clear off all of these drawings. And if we look over here, we're back pretty much to the same levels. And now here we can see that we did get a negative sign. So of course we got a reversal candle over here after getting, this bullish pin bar. We got a negative pin bar, and now we have another, even though it's a green pin bar, it's on the downside, followed by a massive red candle. So this pretty much indicates and tells me that the stock, well, it's going to go down even further, right? So what's going to happen on Monday, if you ask me, as Elon's tweets, of course, move the stock. So if the market conditions are good and we get a gap up, which we probably will, we'll get a gap up somewhere under $210 if I'm right. So after that, we should probably fall down and somewhere around the $205, $206 level, because as we already discussed, there is a major support around $206. And of course, after that, I believe that we will probably break that support as well, because I already told you in one of my previous analysis videos that even Bank of America has reiterated that the stock will likely get down to the $182 range, which would indicate or rather signify another 11 or 12% fall from the current price levels. Now, is this a bad sign? Not exactly, right? All of these stocks, the entire market is going to crash, of course, right? Tesla is not the only stock that will get down 10 or 12%. The entire market, if you ask me, they're all going down by 10 or 12% in a few weeks. So after that, of course, that would be the best opportunity to buy, because after that, right, things will just recover, and that pretty much would be the market bottom. So if you ask me whether Tesla is a buy or not, in my opinion, it's a decent buy. I would say even $207 is not a bad level. I personally, of course, would rather wait for it to get down to 182, because that would be a much better level to buy at. But if you want to DCA, now is a good time to start, in my opinion. With that, I continue to stand by my target and prediction of a short-term bearish movement and a long-term bullish movement. With that being said, let's jump on into the 1 hour chart to analyze some more support and resistance levels. So now that we're in the 1 hour chart, we can see some important support and resistance levels over here. The first one being around here at $215 pretty much, right? A little under $215. The next one somewhere around $218. Another one around 224, another resistance around 226, another one around 229. Of course, 230 would be a good level as well, considering its psychological factors. We did make a high of 237.5, so let's mark that as well. If we look over here, we can see that we have another level in the middle around 221, $222. That is significant as well. We have another resistance where we made a double bottom pretty much. So that is a little under $210. Now, why is that so? In most cases, the stocks will obviously have a resistance or support which is a little under the rounded off levels such as 210, 215, 220. And that is mainly because it was a strategy used by many traders who used to put limit orders that, a lot of people put limit orders on numbers like $210, $220. So people thought that, hey, why don't I just place it a little under or little over that gross level or that rounded off level so that my order gets executed before massive volumes start kicking in. So most people started doing that, and that is why now we have such levels. So of course, if we look over here as well, we have another pretty much just a double bottom around $203. And of course, we did end the last day by getting supported at $206. So quickly mark up these levels on your chart, and to begin the true analysis, let's jump into the 5-minute charts. So now that we're in the 5-minute chart, let's quickly start by analyzing the first few movements of 4th November. Right, so over here we can see that we did start the day off with a gap up and a quick pullback after that. Of course, we were still higher, so it was, kind of an indication that there's a bull trend going on. And it got stronger over here when we got the pin bar candle. But of course, over here, we started getting some pin bar candles to the downside, which, well, it lit off this massive fire. And if someone had shorted somewhere around here, it would have been one of the best short trades that I've seen in the past few months at least, because we can see that the stock fell by more than 8%. And of course, if you trade that with margin, that's like 40 or 50%, right? That's a lot of money. So of course, that is still risky, but anyways, we can see that after we got those pin bar candles, we started to get an engulfing candle over here. So let me zoom in and explain this to you real quick. Right, we can see that we did get an absolute candle with a really small wicks on both sides, which was green. And after that, of course, we got another red candle, which was bigger than this green candle, right? And it had the same, right? It had the same amount of wicks, a really small wick on both sides. This usually indicates, right, if the previous candle is red and the next candle is green, that indicates a bullish engulfing candle. And in a vice versa scenario, we can see that, it's a negative scenario. So with that, let's move on to the next part. We can see that over here, we kind of squeezed into this range. We made somewhat of a cup and handle pattern, right? We squeezed into this range, and of course, we did end this off with a reversal scenario rather, right? After squeezing off over here, we got a pin bar first on the lower side and then a squeezed lower pin bar on the lower side as well. So this indicated massive volume, and of course we did get massive volume, but on the downside, because of course it was a trend, right? We can't really beat the trends. After that, we did make a double bottom at 203.32 that we already discussed, and over here as well we were kind of squeezing into this range continuously that we can see, and we of course broke out of it. Recovery started, people started buying at the discounted rates. But to see whether we will get a gap up or not on Monday, what really matters is this part right here, all the way from over here. So we can see that first up, we did get a reversal to the positive side, after which we did go up. But then we started getting bigger wicks on the upper side, indicating higher selling pressure. Of course, we went down following that. We got another reversal candle over here, which failed because it was followed by a red inside candle. But the last candle over here, which of course was green, but it had a wick on the upper side, which was, of course, bigger than the wick on the lower side. This indicates that on Monday, even if we get a gap up, let's say over here, we will get, a bearish trend after that. But of course, we do know that the stock has gone a lot. It has suffered a lot. It's gone down a lot. So a lot of people would probably comment like, hey, the stock has already gone down so much, it should go up now. Well, sadly, stocks don't work that way, right? We've been in a bearish trend for a long term, and it will likely continue until we hit the long awaited support of 186. Now, I'll quickly get back into the 1-day level to show you guys something. Right, we can see that we've been trying to break this level since a long time, right? So of course, this is exactly the time that we get. This is exactly the opportunity that we needed to break this level finally, go down a bit and actually strike the momentum, right? So this, of course, is not a bad sign, and you should, of course, know that, going down and going up is just a sign of every stock, and it's a bullish trend. Um, it's just really important for a healthy bullish trend that the stock goes down and gets pullbacks as well. So even if you're sad because you bought the stock yesterday and you're in a loss, someone who bought the stock like 10 years ago is really happy because the stock is now finally getting a well-deserved pullback, after which it will go up even higher. With that being said, remember that I could be wrong and we might not get a gap up on Monday and we might not even fall down any further. So remember that you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stox 101 for more such videos. And as always, I will see you guys in the next one.